Welcome back to our channel. Today we're diving into a pivotal topic that's shaping the future of finance: the institutional adoption of cryptocurrencies in 2024. From major banks to tech giants, institutions around the world are increasingly integrating cryptocurrencies into their operations. In this video, we'll explore the factors driving this trend, its implications, and what the future holds. Let's get started. Understanding institutional adoption. Host explaining with visual aids of retail vs. institutional adoption. First, let's define what we mean by institutional adoption. Institutional adoption refers to the integration and use of cryptocurrencies by large organizations such as banks, hedge funds, asset managers, corporations, and even governments. Unlike retail adoption, which involves individual investors and small businesses, institutional adoption operates on a much larger scale and can significantly influence market dynamics. Historically, institutional interest in cryptocurrencies has been relatively low due to regulatory uncertainty, technological barriers, and market volatility. However, as these issues are being addressed, we're seeing a growing number of institutions entering the crypto space. Driving factors behind institutional adoption. Host discussing driving factors with animations and statistics. Several key factors are driving the increased institutional adoption of cryptocurrencies in 2024. Let's break them down. First, regulatory clarity and support have been crucial. Governments and regulatory bodies around the world are establishing clear frameworks for the use and trading of cryptocurrencies, providing much-needed legal certainty for institutions. Second, technological advancements and infrastructure development have made it easier and safer for institutions to engage with cryptocurrencies. Improved blockchain technology, enhanced security measures, and better custodial solutions have all contributed to this shift. Third, the cryptocurrency market has matured significantly. Increased market stability, higher liquidity, and the development of derivative products like futures and options have made cryptocurrencies a more viable investment option for institutions. Lastly, there's growing recognition of cryptocurrencies as a legitimate asset class. Institutions are starting to see the potential for portfolio diversification, inflation hedging, and long-term growth that cryptocurrencies offer. Major institutional players in the crypto space. Host discussing major players with company logos and highlights. Now, let's look at some of the major institutional players that have entered the crypto space. Financial institutions like JP Morgan, Goldman Sachs, and Fidelity have launched cryptocurrency trading desks and custody services, signaling their confidence in the future of digital assets. Tech giants like Tesla, Microsoft, and PayPal have also made significant investments in cryptocurrencies, integrating them into their payment systems and balance sheets. Even governments are getting involved. Countries like El Salvador have adopted Bitcoin as legal tender, and central banks are exploring the development of central bank digital currencies (CBDCs) to modernize their financial systems. Use cases of cryptocurrencies in institutions. Host explaining various use cases with examples. Institutions are leveraging cryptocurrencies in a variety of ways. Let's explore some of the most prominent use cases. Firstly, cryptocurrencies are being used for investment and portfolio diversification. Institutions are adding Bitcoin, Ethereum, and other cryptocurrencies to their portfolios to hedge against inflation and capitalize on potential high returns. Secondly, cryptocurrencies are being used for payments and transactions. Companies like PayPal and Square enable their users to buy, sell, and hold cryptocurrencies, while others are using blockchain technology to streamline cross-border payments. Thirdly, blockchain technology is being utilized in supply chain and logistics. Companies like IBM and Maersk are using blockchain to enhance transparency, reduce fraud, and improve efficiency in their supply chain operations. Lastly, the tokenization of assets and securities is gaining traction. Real estate, art, and even traditional securities are being tokenized, allowing for fractional ownership and increased liquidity. Regulatory landscape in 2024. Host discussing the regulatory landscape with news clips and quotes. Regulation plays a critical role in the adoption of cryptocurrencies by institutions. Let's take a closer look at the regulatory landscape in 2024. Several key regulatory developments have paved the way for institutional adoption. In the United States, The Securities and Exchange Commission (SEC) has provided clearer guidelines on the classification and trading of cryptocurrencies. In Europe, the Markets in Crypto Assets (MiCA) regulation is establishing a comprehensive framework for digital assets. These regulatory advancements have provided the legal certainty that institutions need to confidently engage with cryptocurrencies. However, regulations vary significantly by region, and navigating this complex landscape remains a challenge for global institutions. While some regions are embracing cryptocurrencies, others are taking a more cautious approach. Countries like China have imposed strict regulations, while others, like Switzerland, have created favorable environments for crypto innovation. As the industry evolves, global standards will be crucial for ensuring consistent and fair regulation. Technological innovations supporting adoption. Host highlighting technological innovations with animations and expert interviews. Technological innovations are at the heart of institutional adoption of cryptocurrencies. Let's explore some of the key advancements that are driving this trend. Blockchain technology continues to evolve, offering greater scalability, speed, and security. Projects like Ethereum 2.0 and Layer 2 solutions are addressing the limitations of early blockchain networks, making them more suitable for institutional use. Enhanced custodial solutions and security improvements are also crucial. Institutional-grade custody services from companies like Coinbase Custody and BitGo provide the security and insurance that institutions require to protect their digital assets. Decentralized finance (DeFi) is another area of innovation. DeFi platforms offer a range of financial services, from lending and borrowing to yield farming and liquidity provision, all powered by smart contracts on blockchain networks.